Hey traders, Raghee here. Welcome to Charts and Coffee. Hope everyone's doing great on this initial claims Thursday morning. So Tuesday, Wednesday, Thursday, and of course tomorrow, we've had jobs data, some sort of jobs data every day this week, and it's all going to lead up into tomorrow's non-farm payroll. The two most important jolts. I right now, if I were to look at an event it was one that we mentioned in Top Tier Outlook in our hot zones to track, probably had a little bit more of an impact yesterday than I even thought it would. And I'm mentioning this so that next time, 'cause it's going to happen again, next time we have Bank of Canada on the calendar, on the radar, we've got to be probably a little bit more, and I'm saying this to myself as much as I'm saying this to anybody else. I've probably got to give it a little bit more, I won't say respect, because I do respect these central bank events, but I've got to think about the impact it can make and likely adjust to be a little bit more conservative, maybe moderate on the entries. And yesterday, my Sector Secrets Mastery folks know we put in a lot of swings yesterday, probably none more aggressive than Intel. I like semiconductors. They're the number one performing sector as we head into the end of the year. And, this is, I bring this up not in any way to say, hey, add to positions or things like that. I don't believe in that. I find a level from which I can manage risk, and I manage the risk. For those of you that are wondering, yeah, Rog, those daily price movement ranges worked so well. What would be the adjustment you could make rather than being aggressive? If I was a little bit more moderate to conservative, and I've got to keep that in mind for this month, even on a strong stock in a very strong sector, being moderate to conservative on our entries is probably going to still serve us. So I say that as much for myself as I do my members and anyone watching and listening. Don't feel like the market's going to run away on us, because so far it really hasn't. And if we get aggressive at levels after a accelerated or parabolic move, it does seem to have a lower probability of holding that aggressive level. That said, we've got four sectors in play: XLK, SMH, XLF, and XLI. So while I've got four swings, I'm not piling into narratives that are overlapping. I'm piling into narratives that are outperformers so far this year. And I won't even use the word piling in. That's not even accurate. I'm entering in stocks that are outperformers. So we set up 4 trades yesterday, and Intel did not, by the way, just sort of the punchline, Intel did not survive the move lower. And that's why I mentioned being a little bit more conservative, but everything else did pretty well. And what did those other 3 out of 4 swing trades that we entered yesterday do? They capitalize on those more moderate to conservative levels. So really, really interesting that aggressive levels as we go into window dressing season aren't really holding, but that's okay. We adjust, we adapt, and we trade what we see, not what we think. Yeah. All right. So that being said, let's go ahead and take a look at what we're inheriting this morning in the wake of initial claims. Not much to say other than equities were already sort of moving higher before the 8:30 hot zone. And then if you take a look at the 8:30 candle, this crazy candle that it was, feels like it's 2 inches tall on the screen, it definitely did 2 things. One, continued the overall strength that we had seen 40 minutes before the hot zone, and then definitely kickstarted this thing, right? Kickstart this chart. That should be a Motley Crue song. All right, so let's go. Let's take a look at what we've got and go from there. All right. NASDAQ moving higher off the previous session close. S&P moving higher off the previous session close. Dow, not so much, right? So when we start looking, I know you're going to say, no, see that? So Dow is not participating. All right, so we're going to have to take a closer look at things like XLF and XLI and XLV and make sure we're getting some participation there. And then what about the Russell? What's Russell up to? Russell was in fuego yesterday. Russell's also struggling a little bit. Now, if we want to know when the Russell starts to shift in terms of the way that traders and investors are looking at it, let's jump on over to the Russell. Go to the daily time frame. I'm on Thinkorswim right now. Go to the daily time frame, and I'm just going to drag my line, this PSC. Right, that's the previous session close. I'm going to drag it to the previous session close, which was 1855.6. If we can get above that level, we're not too far below it, we'll likely see a fairly significant shift. And the same thing goes for the Dow. Interestingly enough, it makes sense when the Dow and the Russell are moving together, because both of them, although in very different groups, both of them are very much sensitive to the narrative around banks. Regional banks for the Russell, big banks for the Dow. All right, so that is what we've got in the indices this morning. Last pit stop in the wake of initial claims and pre-NFP. We are at a huge level coming up in the bonds, gang. I do suspect that bonds will be still subject to some tax loss harvesting, but I got to tell you, getting above 121 is going to be a pretty big deal. And that means that not only are the daily time frame of the ZB long bond futures in a very fresh uptrend, but they're now tackling the equator. This is going to be a very interesting December, which is going to set up. I cannot tell you how excited I am for 2024. 2021, half of it was pretty good. 2022 was humbling. 2023 had its moments. 2024 is going to be a year where by March or May, we're going to see the first of however many rate cuts we're going to see. But those quarter point rate cuts are a coming. That means we've got an accommodative Fed back. Gang, this is a great environment to take advantage of trading when we have a Federal Reserve who's willing to be accommodative, who's going to be dovish, cutting rates. Very excited for 2024. And we've been slowly getting a little bit more into these swings. November was a mixed bag, but largely very good in terms of swings. And then we've got our first push into a number of swings for December as of yesterday. So we're really definitely pushing the overnight exposure with a 1 to 3 or 2 to 10 day time horizon, as we're going into what could be a nice strong finish for already strong stocks this year. All right, with that now out of the way, let's talk about questions. And first up is D. Bolton, who asked, any advice on how to combat revenge trading, over trading, as I continue to struggle with these issues? D. Bolton, my answer is going to sound kind of over the top, but this is really the way I think about it. Revenge trading is not a setup, right? And over trading, we know we're over trading. There's some part of our brain that says, do we really have to put this trade on? Everything I do, D. Bolton, I will tell you, calibrates to a 19-year-old kid whose mother said, look, I trust you. You seem to have a knack at this. Go ahead and start managing, my retirement. And you might say, gosh, that's a weird thing for a mom to tell her daughter. It's two things. My mom saw that I had a knack for this. I really didn't ask. I just wanted to do it. I think I nagged her into it in some ways. And she wanted to show her confidence in me, and I had shown some results. But that 19-year-old also knew that I never wanted to go back to mom and say, Mom, I was undisciplined. I was not sticking with my rules, and I've blown up, really at that point, I'm 19, all of our potential futures, right? And I don't take my mom letting me manage. And I think it was hard for her, right? I mean, think about it. My mom was widowed when she was 40 years old. So for her to say, I think you're good at this and I support you in your trying to be great at this, it's a big deal. So the flip side of that coin is I never wanted to let my family down. To me, over trading, revenge trading, trading in an undisciplined way is my nightmare scenario, which is having to go at this point to any number of people that rely on me and say, look, I was undisciplined. I just had to put this trade on. I just had to scratch that over trading itch. That's the answer, D. Bolton, right? I think a lot of times discipline is not, unless you're just some very, very disciplined human. I'm not one. What's the consequence, right? Make that consequence really, really bright. Shine a spotlight on it. And I know what my consequence of poor trading is. And even down to my members, right? When I have a bad trade, and won't say bad, I don't break my rules, but when there's a trade that doesn't go according to plan, I really feel and so responsible because I want to trade not only great for my family, but for my members who are now extended family, right? I take that very, very seriously. So D. Bolton, it'd be easy for me to say it's not a problem because it's not, but that's why, right? I know very clearly the consequence of reckless trading. And I see it all the time when people blow up accounts. That's reckless trading. And I just won't do that to my family or my members, right? That's really the answer. All right, my day trading has been abysmal the last couple of weeks. Tony, join the club. This is the way my day trading has been going. Maybe you're experiencing the same thing. If I get 2 to 3 setups, I'll get stopped out of 1 or 2 for my typical paper cut. Nothing terrible, but it stinks. And then I'll have one trade that goes on for 2 or 3x. And that seems to be, when I think back on our trading in the Mastery day trading every morning, the last, let's say 2 months, if you're only noticing the last couple of weeks, Tony, kudos, because it's been a challenge for longer than that. And what I've noticed is while the win rate's been wavering around 55 to I think 62%, that's terribly low. The win rate is not everything. What's happening is as long as we can keep losses small, in other words, no max debit, no adding, no dollar cost averaging, as long as we can keep losses small, when the winners go, right? We had a TLT trade yesterday that just kept right on going. It seems that there's at least 2 to 3, 4 times a week, one trade that's going to go 2, 3x. And as long as we keep losses small, it by far overcomes those smaller paper cuts. It's not just you, Tony. And I will say, if all you've been noticing it's for the last couple of weeks, I'd say it's been this way the last couple of months. So kudos. And no, it's not you, my friend. I'm telling you, sitting here, it's been a little bit of a challenge. The opportunities are there. The follow through is not. The opportunities are there. The volatility is high. There's a lot of little nuances to why right now feels a little bit more difficult, because it is, right? If you're feeling, gosh, this day trading has been a lot of hard work. Yeah, it has been. It has been. Still profitable, still productive, but not like it was in August, not like it was in September. No, certainly not like it was when we had those screaming high months in summer, like say July, right? Okay, next up, how do you determine a time frame to determine a look before you enter a trade? Bob, I don't use multiple time frame confirmation. I'll just go on the record. I hate it and it doesn't work. So I pick one time frame always. I have 4 time frames I look at. Each time frame has a job, right? 5 minute is for day trading. 1 hour is for short-term swings. Daily is for longer term swings. Weekly is for my position portfolio. So I choose a time frame that captures a certain slice of psychology. Now, choose whichever ones you'd like. You might say, Rog, I don't like an hour. I like a 2 hour. Or Rog, I don't like an hour. I like a 30-minute. Or Rog, I don't like the 5-minute. I like the 2. That's okay, but pick one time frame to do that job. Day trading, short-term swing trading, longer-term swing trading, and your position portfolio. The weekly is what I use for my position portfolio, right? And it doesn't mean I'm going to think about the monthly or consider the daily. Nope. The weekly psychology. Because remember, all of our, I won't say all because that's not true. Most of our tools are going to have different readings based on the time frame and the open, high, low, close of the candle that it's being plotted on. Now, there are exceptions to that. Hourly price movement ranges are not subject to being different on different time frames, as long as it's on a 1 hour or less. Daily price movement ranges, again, they are where they are. There are a small number of tools that are not going to be sensitive to open, high, low, close on that time frame, but they're very few and far between. So that means that most of the tools that you and I are using, Bob, most of the tools that you and I are using are sensitive to the time frame they're being plotted on. It also means that a 5-minute slice of psychology is very different than a 1 hour. So why would I need them to agree? I really don't. I really don't. I think that, we know that inherently sort of management by committee or decisions by committee. How many of you say, gosh, yeah, Rog, that doesn't work? This whole idea of doing things by committee. Yeah. Well, that's multi-time frame trading by committee, that the 5 and the 30 and the 2 and the daily and the monthly all have to have a say. They don't. They do not. And that's the way I look at it. So pick one time frame, stick with that time frame, and then that way there's never a question of, well, what about this other time frame? Because I'll tell you what, the flip side of multiple time frame confirmation is a very slippery slope of finding a time frame and an indicator reading that agrees with the position that we have on. I know none of us have ever done that. None of us have ever been bullish because we're long, right? But for the few of us mortals who have been there, yeah, that's a really, really slippery slope. And thanks for the question. How do I determine? I've tested, and those 4 time frames are what work for me. All right. Next up, 45.50 seems to be the initial support on the ES held through the, here's Tony, here's a cool thing you can do. And maybe you do already. So what I like to do, to your point, if there's a level like 45.50, or if there's a level out there that's got my attention, what I like to do is, and I'm going to show you right now. Let's take a look at a 5-minute chart. And I want to make sure I'm looking at the, electronic trading hours. And I'll look at the volume, right? Look at our point of control, 45.54. So not only, Tony, you're right, we can be a little bit more nuanced, 45.54. And why? Size, right? When we're talking about flow, gang, it's almost always going to be price-based volume, participation, attention. That's why anchored VWAPs are so powerful. That's why volume profile is so powerful. That's why my V-score is so powerful. It's relying on the same thing. It's relying on price-based volume. That's why knowing where open interest is on an option chain is so powerful. Size tells us a lot about the amount of traders who have dug their heels in at a specific spot. So yeah, I'm with you. Since I'm looking at that point of control there. If I want to go to 7 a.m., it sometimes changes a little bit, right? Depending on how far back you're looking at volume profile. But yeah, great observation. And that's how I do it, right? But great observation. There it is. It's a little bit easier to see when I make the chart a little taller, no? All right. Do I ever glance at the RSP for my analysis? Never. No, never. I don't. Next up is, let's see. Quick explanation of my Momo and trend. Oh, Stephen, the 2 colors at the bottom. I flipped over to TradingView, but it's the same thing. The top row is momentum. The bottom row is trend. Green is bullish. Yellow is neutral. Red is bearish. I mean, that's really it. I like the color code things, right? I kind of believe in the Garanimals school of trading. So yes, I look at the color. The 200 has a different job. And yes, being above the 200 is more akin to being in the bullish hemisphere of the chart, being below the 200. And it's the EMA that I use, Stephen, and not an I use an EMA, not an SMA, but it really doesn't make that much of a difference. I like the exponential moving average, a little bit more recency bias priced into that. However, being above the 200, far more bullish than being below it. All right. Okay, so that is it, gang. As always, thank you so much. Thank you so much for being a part of Charts and Coffee. And I will see you all in the Futures Room and in the Sector Secrets Mastery in just a moment. Be good to each other, gang.